Hello everyone, welcome back to my channel. In today's video, I will be sharing with you what are the actions you can take in order to reduce your income tax legally. If you have completed these actions in 2021, congratulations, you will be entitled to the tax reliefs in the upcoming YA 2022 tax assessment. But if these actions are new to you, do consider completing them in calendar year 2022 in order to be able to claim the tax relief for YA 2023. It's always good to plan ahead, right? Okay, so number one, make voluntary top-up to your CPF SA account. Everyone needs a plan to save for our retirement. If your plan to grow your retirement nest egg is to stash money in a savings account, you will be better off topping up your own CPF SA and your loved one's CPF SA account. You can enjoy tax reliefs of up to 7K on cash top-ups to your SA and a further 7K tax relief on cash top-ups to your loved one's SA. By lowering your chargeable income by up to 14K, you may fall into a lower tax bracket and enjoy even greater tax savings. In addition, your money is now in a virtually risk-free investment instrument that gives you 4% per annum without any fees. Do take note that you can only top up your SA up to full retirement sum. Do check out my previous video on CPF top-ups if you want to know more details about topping up your special account. If you would like to make CPF top-ups, it's always good to top up at the beginning of the year so that you get the interest rolling earlier. Number 2, make voluntary top-up to your CPF MediSave account. If you would like to save up for your MediSave account, you may also choose to make voluntary top-up to your MediSave account if the amount in your MediSave account has not reached the Basic Healthcare Sum (BHS). This is a great way to receive tax benefits for setting aside money for medical expenses, including paying your MediShield Life and integrated Shield Plan premiums. Moreover, monies in your MediSave account earn at least 4% interest per annum. If you didn't make the voluntary top-up in 2021, you can start to plan whether you want to top up in 2022 to enjoy the tax relief for YA23. Do take note, from year 2022 onwards, there's a change in the maximum tax deduction for MediSave top-up, which is capped at 8K, and this includes top-up made under RSTU. So if you have made a top-up to your SA or RA of 7K, you're only entitled to a maximum of 1K of tax relief from topping up your MediSave account. If you have limited cash and is unsure of which CPF account you should top up, do check out this video if you need some guidance. Number 3 is topping up your SRS account. SRS is a voluntary scheme to encourage individuals to save for retirement over and above their CPF savings by offering tax incentives. Contributions to SRS accounts are voluntary and are eligible for a dollar-for-dollar tax relief. The annual SRS contribution cap is currently set at 15K300 for Singapore citizens and PRs and 35K700 for foreigners. Contributions to the SRS account can be used for investing and can subsequently be withdrawn once you reach the statutory retirement age of 62. Taxes on withdrawals are granted a 50% concession after you reach the statutory retirement age. Number 4, contribute to a registered tax-deductible charity. Cash donations made to an approved institution of a public character (IPC) or community chest are deductible donations, provided you do not receive any material benefits such as advertising exposure or other gifts in kind. Okay, but not all registered charities are approved IPCs. Donations made to a charity without approved IPC status are not tax deductible. You can try to search online for the organizations that are approved IPC at the charity portal. A donation made to an approved institution before year ends would allow the donor to claim tax relief of 250% of the amount donated. If you are in a high income bracket, making tax-deductible donations can really help you to bring down your chargeable income. Personally, I like to make the donation at the last month of the year. Little tips here: if you make online donations and charge it to your credit cards, there will be some rebates earned from the credit card as well, depending on which card you are using. I would usually factor in these rebates and make a higher amount of donations. Number 5, upgrade yourself by attending courses. If you are currently working, IRAS grants reliefs for costs incurred at approved educational institutions, such as examination fees, course fees, and tuition fees. You may claim up to 5,500 in course fee relief per annum. Whether it is attending short professional or vocational courses or full-fledged diploma degree or master's program part-time, tax reliefs are one more good reason for you not to delay signing up to upgrade yourself. Number 6, move in with parents or grandparents for the parent reliefs. If you have incurred at least 2K or more in supporting your parents, in-laws, or grandparents-in-laws, you may claim parent relief or handicapped parent relief for up to 2 dependents as long as they are 55 years of age or above and did not have an annual income exceeding 4K. But you can only claim for 2 dependents, and you and your spouse cannot double claim on the same person. You get more tax relief if you stay with them. Parents relief and handicapped parent relief may be shared with other claimants, provided no one else is claiming any other relief except for grandparent caregiver relief on the same dependent. Okay, number 7 is deductions on work from home expenses. The default work from home arrangement put in place for March of 2021 may mean that you are eligible to claim work from home expenses. These expenses cannot be already reimbursed by your company. As for example, you can claim the electricity charges and telecommunication charges against your employment income if you have been working from home. So for instance, you may compare the bills before and after working from home. For example, if the electricity charges before working from home is $50 and after working from home is $60, the difference of $10 can be claimed as a deduction, being expenses incurred for work purposes. If there are more than one person working from home within the household, the increase in charges can be shared equally. Do take note that expenses that are capital in nature cannot be claimed. This means that setting up costs of a better home, fiber broadband, or purchase of an office chair or desk are not claimable. In terms of Wi-Fi expenditure, no deductions can be claimed if the Wi-Fi was set prior to working from home. One-time charges or installation or connection fees cannot be claimed as they are capital in nature. So what are you waiting for? Time to dig out your past utility bills and calculate how much is claimable. Alright, so this is the summary of the types of tax reliefs I have just covered. Do take note that there is a total personal tax relief cap of 80K per YA. So do plan out the tax reliefs in advance. I hope you learned something from this video. Thank you for watching. Bye.